Welcome back, traders. In today's video, we're diving into one of the most powerful concepts in trading: support and resistance. If you've ever wondered why prices bounce at certain levels or how professional traders spot winning entries, this is the key. Stick with me until the end, because I'll not only explain the basics, but also share practical strategies that you can apply immediately to improve your trading results. First, let's define what support and resistance really are. Support is a price level where buyers step in, preventing the price from falling lower. Think of it as the floor of the market. Resistance is the opposite. It's where sellers step in, stopping the price from rising higher. This acts as the ceiling. These levels form naturally as traders react to psychological price points, supply and demand zones, and historical data. The more times price reacts to a level, the stronger it becomes. But why does this happen? Simple, it's human psychology. When traders see price hit a familiar level, they act. Buyers rush in at support, sellers unload at resistance. Large institutions also place massive orders at these levels, making them even stronger. This is why support and resistance are used by professionals across forex, stocks, crypto, basically every market. Now let's get practical. How do you actually find support and resistance? Look for previous highs and lows. Markets remember where they've turned before. Round numbers, levels like 1.2000 in forex or $100 in stocks often act as psychological barriers. Moving averages, dynamic support and resistance, especially the 50-day and 200-day. Trend lines and channels, diagonal levels can be just as powerful as horizontal ones. When marking your charts, keep it simple. Draw clean zones, not exact lines, because markets don't move in perfect straight edges. Now, let's talk about how to actually trade using support and resistance. Strategy 1. Bounce trading. When price touches support, look for bullish candlestick confirmation. Enter long with stop loss just below support. Reverse for resistance. Strategy 2. Breakouts. When price breaks through a strong level, it often leads to big moves. Enter after confirmation, not on the first spike, to avoid breakouts. Strategy 3. Roll reversal. Once broken, support often turns into resistance, and resistance into support. Watch for this retest. It's one of the most reliable setups pros use. Strategy 4. Combining with indicators. Pair your levels with RSI, MACD, or volume for stronger confirmation. Before you jump into trading, avoid these mistakes. Drawing too many lines. Keep charts clean. Trading without confirmation. Never buy or sell just because price touched a line. Ignoring higher time frames. Always zoom out to see the bigger picture. Support and resistance are the foundation of technical analysis. If you master them, you'll see the market in a completely new way. If you found this video valuable, make sure to like, subscribe, and hit the notification bell so you don't miss my next video, where I'll break down candlestick patterns every trader must know. And remember, trade smart, not hard. See you in the next lesson.